Welcome back to the weekly Brooklyn Market Update, brought to you by Engel & Volker's Brownstone Brooklyn. My name is Katrina Carney, and I'm the brokerage manager for Engel & Volker's Brownstone Brooklyn, and I'm joined again today by Donald Brennan, our founder, principal broker, and local Brooklyn property market expert. So today we're going to start a little differently because we're going to talk about properties priced below $2.25 million and what happened last week in the new to market and in contract properties at this slightly lower price point. So Donald, what do the numbers tell us about whether more properties are coming to market and what people are actually buying when you look at the bulk of this market below $2.25 million?
Good afternoon, Katriona. Good to see you. Pretty active market here in Brooklyn right now. We'll get into that a little bit longer on in the talk here about the reporting recently by New York Times. But looking at our own reports, looking at last week's report for the 2.25 and below, which is about 90% of the market on a dollar value for us. Our luxury report focuses on about 10 to 12% of the top end of the market on any given week. So we're below that here with this price point. And we track data for about 16 neighborhoods. So we don't track the entire borough of Brooklyn. We're active in about 30. There's about 62 neighborhoods total in Brooklyn. So we're looking at a specific segment of the marketplace when we talk about our data. So it may not match what you hear out there, but we're going to make the comparison anyway. So pretty active under this price point since Labor Day. Last week, there was 52 new listings coming to market and 79 listings going into contract. Now, it's not those 52 that came to market, obviously, because it's 79 is in excess of that, but there's existing inventory out there. But anyway, that's a pretty good ratio where you're having more units coming into contract than entering the market. Since Labor Day, there's about 298 new listings introduced to the marketplace, and about 200 listings went into contract over that same period. So that's a pretty healthy marketplace. Last week, the greatest interest was in resales of existing condominiums, with 25 of those going into contract last week and 65 total since Labor Day, so the last 3 weeks in contract. Next most popular product type that we track was the condominium as a sponsor unit, which is new construction condominiums. 12 last week in contract, 50 since Labor Day. After that comes the townhouses, which are fewer entering the market than either the resales or the sponsor unit condos. When there were 32 of them introduced over the last 3 weeks, 27 have gone into contract since Labor Day, with 11 entering contract last week.
So do we still see that sort of marked difference between condos and co-ops in terms of the average asking price, in terms of where we are now in the market, having experienced COVID and coming out of it versus last year?
Again, the recent data that we've put together definitely indicates what we've always known, kind of, that there is a discount to a cooperative asset type on average. And again, we're just talking about averages here versus condominiums, whether resales or sponsor units. Looking at just the last 3 weeks, some pretty healthy numbers for co-ops coming to the market. Since Labor Day, about 90 co-ops were introduced to the market, and 58 of them went into contract. So a pretty good healthy ratio there of demand for that type of housing unit. On average, the co-ops that we show in our data set have asking prices about 25% less than the combined average of the resale or sponsor unit condominium. Again, on average. There's always been a discount for the co-op housing type due to a number of things. One is most people entering the market aren't familiar with that type of housing unit, so it's a little bit foreign to them literally, and not quite comfortable with it. Some of that product is a little more dated, definitely not a lot of new co-op product being introduced to the market at any given time versus condominiums, which do get resupplied with new development. And it's a little less liquid because of the process usually involved with buying into a cooperative, which is shares in a corporation, versus a condominium, which is you don't really need approval typically to trade your unit. So that illiquidity, which is a kind of a protective measure by the corporation, which has its pluses as well, does have the effect of reducing the price on average for those type of housing units.
So let's go on to the luxury segment, which, as you pointed out, was, I believe you said 10% typically of the properties that we're talking about here when we go to 2.25 million and above. So obviously a number of the townhouses went into contract. What type of selling features or factors do you think seem to distinguish the houses that are going into contract from the ones that are perhaps sitting there a little bit longer?
So the market is pretty active with quite a few listings coming to market post Labor Day again for townhouses. There's 44 have entered the market since Labor Day, 12 last week, and 13 over those 3 weeks have gone into contract, with 4 of them going into contract last week. So, I mean, the thing that, the high level thing that distinguishes these deals to me is just price, without getting into the discussion about condition. It's very hard to compare a lot of townhouses or any townhouses in Brooklyn for the matter, because it's not real apples to apples comparison, especially for existing housing stock. You could almost do it with anything that's brand new and a sponsored type of speculative development, which there isn't a lot of at any given time, but no two townhouses are really the same. So, you know, it's the price point to me, which is distinguishing them here. Last week, the total range, you know, the top end of the range was a top asking of just under $11 million. Again, down to the 2.25, which is our floor there. And that in contract average of those homes, which was 4 last week, was $2.94 million with an average discount off the asking price of 2%. So the top end of those 4 deals that went into contract last week was 3.5 million. So, you know, when we're at 2.25, we don't go too much further over to get the majority of the deals that are finding buyers today. So that to me is what's distinguishing them amongst the entire set of opportunities. Is the demand is there, it's just at the lower end of the price point range.
So is it a perception or a reality that there seem to me to be more townhouse resales coming onto the market at the moment than we would typically see?
The pool of townhouse listings, again, are scattered across the 30 neighborhoods that we track, and the 15 neighborhoods that we track, and the 30 markets that we're active in. Some neighborhoods have what I consider an elevated supply, and those numbers of available inventory, from my observation, pre-existed the COVID pandemic timeframe. I don't really see any material change to the townhouse inventory coming out of the lockdown through the summer season post Labor Day that I would consider an unusual amount of homes. There was certainly less activity during the lockdown when the real estate industry couldn't perform its function, and obviously buyers weren't there anyway. So some of that supply was, or listings were muted with a little bit of increase in numbers post mid-June when the pause was ended for phase 2, which is the real estate sector. And again, it's certain neighborhoods are experiencing some oversupply. And if anybody has any questions about that specifically, you know, feel free to reach out to me directly and we can talk neighborhood to neighborhood. But I don't see any kind of significant increase in what would typically be available this time of year due to anything that we've been challenged with over the last 6 months here in Brooklyn.
Okay, so before we start to wrap up, are there any similarities or differences in the condos versus co-op listings that you've seen at this higher price point of above 2.25 million? Any notable transactions or any data points that you think are worth highlighting?
The number of co-ops in the luxury category is less than obviously condominiums, and even less so the townhouses on just an inventory number of what's available today, with almost no demand at the top end here for co-ops. We show no co-ops above 2.25 million going into contract over the last 3 weeks post Labor Day. So, you know, that's a number of things are going on there. Obviously, a lot of the newer condo product that is being delivered to the market in Brooklyn is quite a range of product. It still goes down to studio sized units, 1 bedrooms, 2 bedrooms, and definitely more larger units than may have been typically delivered to the market, you know, a decade or more ago. So that trend of larger units, I think eclipses on average the size of maybe the largest co-ops that are available in Brooklyn, which again, the co-op itself, not being a very new product, is in pre-existing buildings, some mid-sized to large doorman buildings throughout the borough, and a good amount of it in townhouses, your typical townhouse subdivided into 3 or 4 units that have co-op ownership structures. You know, it's certainly a charming home to live in when you live in a brownstone. But some of those spaces may not be configured or sized the same today for larger units and condominiums, and they certainly don't have the amenities that any new condominium product has today. Almost any co-op out there in the marketplace, small, medium, or large, is going to have a hard time competing what is delivered to the market by speculative developers today in their condominium projects with a ton of shared amenities. So it's not a big surprise that, first of all, there's not a lot there, and then having a hard time competing with what is newly delivered to the market today.
So let's end on that New York Times article that I know that I've had lots of people talk to me about, that recently came out talking about how hot Brooklyn was. And every time I bump into someone, they want to bring up that article. Are we seeing that in this data?
So we certainly see it in some portion of our data. Again, as a reminder here, we focus on the data that we collect is only 16 neighborhoods. We're very active. We're active outside of those neighborhoods, and we continue to collect that data, but we're only reporting on 16 neighborhoods at the moment. We've created our own market report from scratch, and we're building it out as we go here forward in time. The borough, as I said, is pretty big, 62 neighborhoods, just under 3 million people. And the headlines that were out there, when you get past them and get into the detail of what they're reporting on, and it kind of breaks it down that around an average price point of $250,000 was the strongest activity historically last month, with a 100% increase of deals, properties going into contract versus what the was happening a year ago. And similar strength as you move up the range of pricing, but our floor, so to speak, on our pricing of things that we focus on, the neighborhoods we focus on, is more around $1 million as the low point. So we're near the top of that range with what the Times was reporting on based on StreetEasy's data set. So again, we're picking up some of that, and we can certainly see it when we look at our full market report. And then again, the kind of the lower end of the luxury range, certainly demand there. So it's pretty clear. As I mentioned last time we were on the call here, the street activity, the life of the inhabitants of Brooklyn visible on the street every day. And it's really great to see, as I mentioned before. So to me, it's kind of in the same phase, same trend that we were seeing prior to COVID, where demand was there at the kind of lower price points, So a continuation of that, of being on pause for a while. And then the top end, struggling a little bit, depending on what it is, of buyers being committed at the moment. And, you know, let's not forget, we're very close to election day. Anytime there's a general election in this marketplace in New York City, a significant number of buyers, market participants, go to the sidelines. It happens every time, and it's just a little bit of a pause for them because of the unknown. And once we get past there seems to be, looking at data that has been published in the past, kind of a strong amount of activity early in the new year following a general election year. So we're looking forward to that. Hopefully it'll pick up the any kind of softness that is in the top end of the market right now, and continue to ride the popularity for people who are just entering the market and becoming homeowners for the first time in Brooklyn.
So that's it from us. Check back in next week for more accurate and informed observations on the Brooklyn property market. And of course, our details are to follow: direct message, call, or email. Thank you from me. Bye.
Good one. Good seeing you. Bye.
Bye, Donald.